There's really only one place to go, in my opinion, and that's gold. You can see this is gold during all the recessions since the 1960s. It's risen every time but twice, and the two declines were single digits. And again, this is during the recession. The gold price is actually rising when there's an economic contraction.
Yeah.
So I
think part of this is because gold tends to lead, and then silver follows a little bit later.
Good point.
Yeah. So gold rises, and then after the recession is over, silver rises, probably to a greater extent usually.
In a recent show featuring MikeMaloney and JeffClark, the discussion centered around the notably positive implications for gold investors in the current economic landscape. With a mounting volume of data signaling a looming recession, or possibly one already, how should one invest during these uncertain periods? What asset has a proven track record of shielding against economic downturns? Reflecting on historical economic downturns, the conversation highlighted significant events and the performance of precious metals. The 1980 recession in the UK, where the economy slumped for 5 quarters, exhibited a considerable spike in silver prices during Silver Thursday, followed by a subsequent price climb in the next year. Examining the impact of the global pandemic, which induced substantial economic disruption globally, the conversation spotlighted silver's trajectory. Although the initial response saw a decline in silver prices, the rebound was attributed to significant investor demand, coupled with increased industrial use as various sectors reopened. Over the past 50 years, silver has outperformed the S&P 500 in only 3 of the 8 recessions, 1973, 1981, and 2007. Conversely, gold has historically proven to be a robust performer during economic downturns. For instance, during the stock market collapse 2007, demand for gold investments surged and continued to rise. The value of gold doubled between 2007 and 2011. Similarly, amid the unprecedented fear and uncertainty sparked by the COVID-19 pandemic, the price of gold surged to record highs, along with substantial inflows into gold-backed exchange-traded funds. Both Mike and Jeff convey their shared sentiment in the discussion, leaning towards viewing gold as a more stable and reliable investment during periods of economic recession. However, they noted that silver could offer higher returns once the economic situation shows improvement. Before diving into this interview, subscribe to our channel and give this video a big thumbs up.
I looked at how silver has done during recessions. And again, I want to point out this is just during the recession, the official recessionary period. We're only measuring it during the official recession.
Yeah, from the onset of the recession to the month that we come out of it. Yeah,
exactly, right. And you can see a lot of times, especially, since the 1990s, even though silver has fallen during the recession, when it came out, it usually rose and sometimes violently. But during the recession, we probably shouldn't expect silver itself to do extremely well.
Point out something on the silver chart, go back to it. All of the viewers know. But take a look at the height of the 1980 peak. And this is probably, I'm not sure which data this is. It's definitely based on the close, not an intraday. The intraday high in 1980 was 52.50 on the Chicago Mercantile Exchange.
Yeah, this is just measuring closing prices.
Yeah, the close was 50 on that exchange. It looks like you've got around 49.50 here or something like that. But what else has not exceeded its 1980 high? Is there anything else in society? This chart shows it. You've got the 2011 high, and before that, the 1980 high, to pierce that 1980 high of silver. I think it's just amazing. But yes, this is showing that for the during recessions, silver is not necessarily the place to be. But then right after the recession, it might just do a slingshot move like it did coming out of COVID.
Mike, look at the declines there since 2000. They're all single digits. So it's not like silver crashed and didn't recover, during a recession. They were mild declines. So that's kind of encouraging.
Yeah.
But where do we go? Well, there's really only one place to go, in my opinion, and that's gold. You can see this is gold during all the recessions since the 1960s. It's risen every time but twice. And the two declines were single digits. And again, this is during the recession. The gold price is actually rising when there's an economic contraction.
I think part of this is because gold tends to lead, and then silver follows a little bit later. So
good point.
Yeah. So gold rises, and then after the recession is over, silver rises, probably to a greater extent usually, because silver is pretty much like gold but leveraged. However,
Right.
the gains to be made, I believe, in gold are going to be big enough to where you don't actually need the leverage. So,
Yeah. Good point.
Yeah, this is excellent, Jeff. So it's showing that your greatest protection during a recession.
In a historical analysis, it's been observed that the S&P 500 tends to reach its lowest point approximately 4 months before the conclusion of a recession. On the contrary, the index typically peaks about 7 months before a recession starts, marking a cyclical pattern closely tied to economic contractions. According to data from CFRA Research, in the last 4 recessions dating back to 1990, the S&P 500 experienced an average decline of 8.8%. Notably, during the recent recession triggered by the pandemic-related lockdowns between February 2020 and April 2020, stocks fell by 1.4%. However, by the year's end, the S&P 500 rebounded, closing more than 16% higher. The prevailing sentiment shared in discussions emphasizes the historical performance of stocks, notably the S&P 500, during recessions. Mike and Jeff involved in the discussions have underscored the importance of maintaining a significant portion of one's investment portfolio in gold as a hedge against economic uncertainty, particularly in anticipation of an impending recession. This strategy aims to mitigate risk and provide stability during periods of market turmoil, considering the historical patterns and behavior of stocks during economic contractions. Let's get back to the interview.
Recessions are inevitable. Even with all the manipulation that they may be doing, you can see that we always have recessions still. And
Yes.
this begs the question, Mike, where does one invest for a recession? How does one prepare their portfolio for a recession? And I think it's fair to say that a lot of the mainstream will say, well, buy stocks, buy defensive stocks, buy dividend paying stocks, whatever they might say. But Mike, this shows that the S&P is usually falls during recessions. This chart measures the recessions going back to the 1960s, and you can see what stocks have done. They've usually fallen, and since 2000, those 3 recessions, you'll see they've fallen each time. One of them was over 37%. So I think just generally buying stocks and holding on them through recession, you're probably not going to see your portfolio rise. And the best insurance to have in your portfolio is gold. You mentioned before that CPM group showed historically that 20 to 25% of one's portfolio should be in gold. And that's critical at this time as we head into a recession. So I look at my portfolio and add up all the values of all the portfolios, and I have to ask myself, is 20% of the value of everything I own in investments at 20%? So that's a lot. But I think that's where people need to be, is 20%, especially in the current climate that we're in, right?
Yeah. I'm a lot higher than 20%, but when I say precious metals, my gold allocation is quite small because during the time of my purchases, the gold-silver ratio silver has been extremely undervalued during that whole time. And so I usually end up buying, when it's above 70 or so, 65, 70, I just buy silver only. And so I've ended up with a lot of silver. It would be nice to have more gold, but I've got plenty. So I feel comfortable. Yeah.
Good.
This is awesome.
Gold prices held above the key $2,000 level on Monday, buoyed by safe haven demand from an escalating Middle East conflict, while investors were on a cautious watch ahead of the U.S. Federal Reserve's policy meeting later this week. Given the insights shared by experts and the historical patterns witnessed in financial markets during economic downturns, in the face of potential economic challenges, how should investment strategies be shaped to maximize stability and potential returns? How crucial is the inclusion of gold or other precious metals in an investment portfolio to navigate periods of economic uncertainty? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.